Hey, good afternoon, folks. Welcome to Money Me. I do appreciate you guys taking the time to watch this video. Gonna keep this short. Try to keep, basically, you guys know as the thumbnail, the market is down again, and I warned in the beginning, and I'll tell you, days like the market, and that seems what we're getting. We're getting 1, 2 days that the market is up, and if anybody's buying puts on that day, would have made a lot of money because there's a lot of stocks today. As you can see, the sea of red here, and I'm using the Webull desktop app. If you guys are interested in signing up a Webull, you want to put any money in the market and sign up for an account there, click on the link below in the description. You get free stock, and I think I get one as a referral. But that's and the only reason I mention that is because of the if you're looking at the screen here, what kind of app or what kind of software am I using to show the screen? I got CNBC playing in the background, and just basically as I'm filming this, we were about 7 minutes away from closing the market. And Target. I mean, when I saw the news this morning about Target, wow, 25. Let's see where Target is right now. I silenced that a little bit so you guys aren't struggling here. But Target today down 25%. Options, you could have killed it if you would have. And there was news yesterday on Walmart, and if you looked at Target options today, the 170s I was looking at earlier, up 7,400%. So basically, $1,000 yesterday in the Target would have been $74,000 today, and I, we have a big mess because and the reason I'm making this video, and I just full disclosure, I am not a licensed broker. I make these videos basically to talk about money and use my experience over the last 25 years as a stock trader, investor, landlord, business owner to basically talk to the everyday person that is what's going on, why is the market down, and clearly the market is down because of inflation. And the cost of doing business is just getting to the point where it's going to cut into profits. We had with the shutdown that we had in 2020, and the Fed flooded our country with all kinds of money. People went out and bought TVs. They were getting more money than they actually needed, and certain stores that were still open were business was great. But now here we are basically 2 years later, those checks don't come no more, and people don't need no more televisions. So they didn't even adjust for I can't believe that a lot of these big retailers didn't even adjust to say, hey, we basically had something that was a phenomenon, that people were out, they were, it was crazy. And now we have to adjust our inventory, and I know some cases where, and I'm going to give the example of like a product that they would carry maybe 3 of, they were constantly selling out of it in 2020 because people couldn't find it, and then the stuff coming in from China and stuff that was delayed. Well, when it caught up, then all of a sudden the store's selling 10 of them, and the demand wasn't there for 10. Now they're having to clearance them out. The close down created that people, I just don't kind of get it. Everybody feels that basically minimum wage is $7.25 an hour, and I agree. Nobody can live on $7.25. Minimum wage to me was always, and I've had a business that it was pretty much for a high school kid or someone going to college. It was a starting point, sort of a training wage. I know in my business a lot of times that we would start somebody more than that, and even with experience that factored into it. But now you got people basically $15-$20 an hour, and people are still struggling to find help. Companies are struggling to find help, even with sign-up bonuses I see all the time. And I predict what's going to happen. And if people aren't careful that are basically turning down jobs now, it's going to be much harder 6 to 9 months down there to get a job. Those bonuses will probably be gone. And some companies will say, hey, we don't need to, we're not as busy, so if we needed 200 employees, now maybe we only need 150. and that's going to catch up, and that's gonna bite some people in the ass that haven't taken a position or haven't taken a job. I don't know what those people are doing, if they're living off the system or if they're living off of savings. A lot of people who got those stimulus money spent the money. I mean, there are certain people, and that's what's sad about it too. There are certain people, because they weren't going to the casinos, or they stayed at home. They got hooked up into the market, had taken a hit when it first dropped, and people started actually, I want to say, gambling a little bit, and started getting into the Robin Hood and getting into stocks that they knew nothing about, and using margin debt, and doing things that I know myself. I played the opposite. I was short some stocks, not thinking it would bounce back, and it hurt me personally because I was short some names. One of them I was short, like, why would people be buying an iPhone if you're at home? I quite didn't, and they were hurt. Didn't realize the impact until later of all that stimulus money that was out there, that people just were spending it like crazy, and going nuts with the money. So, but here we are 2 years later, and over the last year, the price of gas has doubled. The price of wages for a business are up huge. The price of food is up huge. I mean, when you think about it, like I'm here in Pennsylvania, our gas right now is about $4.59, $4.69 approximately. That's about the average. Now, we have the second highest gas tax in the United States, and so that makes up a little bit of a difference. I was just in South Carolina about a week ago, traveling down there for business, and I saw it for $3.99. That was the cheapest I saw it in a while. But now, from what I understand, this past week, everybody in the United States is over $4. And that is definitely an impact. And one big thing I've noticed, and I never had noticed before at that level, is that diesel is $2 more a gallon. So you got truckers out there that have bills that are thousands of dollars a week just to transport goods. So obviously they can't absorb all that. Is if it costs, let's say, $1,200 to transport a load to a store or something. Now if their expense is, if diesel is up 100%, cent over, they have to pass that along. So now all of a sudden, someone's delivering something to your store. Those goods are more money. So the goods on the shelf is more money. Then the pay the employees is more money, and this is turning into a big problem. We basically, and I think, and I don't like to get too political on here on my channel, is that we basically have shut down wanting to produce our own energy, which I think was a big mistake. And then the issue with the Russian-Ukraine, and we're changing the market as far as where oil is coming from. We've created a huge inflation problem, and now we're trying to beat inflation, and we're raising interest rates. So anybody who's out buying a home is, especially out towards California, you're getting, a lot of homes out there, $400,000, $500,000, and now all of a sudden your house could cost you $400 more a month. It's a lot of money. I mean, that's basically $4,800 a year gone. Even if you're making $2,000 a week out there in California, basically 2.5 weeks worth of income has now been wiped out because of the higher interest rate, which is especially in certain areas, is gonna hurt housing sales. So we're here. Are we closing the market right now?
Dollar Tree down 14.5%.
Yeah.
Tractor Supply, Dollar General, Ulta Beauty.
Right
all
now,
of these names
we
getting hit
got
by
20
double
seconds
digits.
with
Growth
this.
names also selling off across the board, especially the mega
The Dow
cap
right
tech.
now
The
is
Nasdaq
down
is down
1,178, 3.7%. Oh, we lost our. There we go. And the Nasdaq is down almost 5%, 4.7. The S&P is down 4%, 163. I would not be putting any money. I predicted that this market, if you go back and look at some of my videos, I predicted the market would drop 30% this year, and a lot of stocks have dropped even more, 50 to 80%. There's stocks that I follow that have dropped 80%. So what do you do in this environment? You don't add no big money. If you got a 401k, you continue to do that because if your employer's matching it, you're fine. And this is what's part of dollar cost averaging, so you're fine there. It just, what do you do if you're down 50% on a stock? That's tough because I used to follow Investors Business Daily, and I don't buy that newspaper no more. They got ridiculously expensive. That I guess if you only bought it once a week at $5, it's like $200 some dollars a year. If you're trading thousands, it's all relative. But I don't know. You used to be able to get newspapers. I remember you used to be able to get Barron's for like $50 a year. Even they doubled. It's like $110 a year now to have it delivered to your door. And now with so much that you could find on the internet, it's a lot easier to, But I still like a print. I do like the Investors Business Daily, but I don't think right now there's anything that you can. I mean, things are bad. I'm kicking myself because I had McDonald's short and covered, and look, one it's I covered. I took a small loss, a small like $100, and 7 days I basically would have had a gain now, a small gain because I'm not short a whole lot on that, but the last 2 days alone, you're talking basically 247 down to 230, 17 points. In what they say that people are saying that no matter what, people are still going to eat McDonald's. Yes, but the price times earning is historically high, so that's why I was short. I am not short nothing right now, sadly. I'm long certain things, but I got long a couple stocks last week that already have been beaten up. Netflix, I'm in at about 178. Yeah, that's what I'm in at. So that's no big deal. I mean, it was, if you could see here, it was 162 the other day, 178 in one account, and then another account in and around 190. I mean, it's the cheapest it's probably been as far as price times earning in about 5 years. So there are you can pick and choose, but I wouldn't get crazy. There's people that are going to trade this market. You got a stock that's down, and honestly, it's up, and that's where you're gonna get so much up and down, because if people are willing to put money into the market and get a quick 10%, they'll do it. But there'll constantly be that pressure that what we kind of need is some sideways actions for things to stabilize, and we're not getting it. Target. Let's look at the news real quick there. Yeah, and I mean, even Amazon. I mean, Target was down $25 today. Amazon, look at Amazon. Amazon's getting hit, and Amazon's a high PE, high growth stock, and that's why you got that. But you basically got what has happened. And just to be clear here, basically the gains of 2020 and partially 2021 have all been wiped out in the last 5 or 6 months. I would easily probably say 70% of stocks have lost that year and a half gain in the past 6 months. And I think there's stocks I'm nibbling at. Like the other day, I bought, not a big position, I bought 5 shares of Disney. I put $500 into it, and because when it's crazy like this and people get the fear in them, they will start selling things that they probably shouldn't. It depends when you need the money. If you think it's gonna, if people feel like, here's Disney. I'm sorry, I put the wrong symbol in. Disney was at it's 104 today, down $4. I think we bought it. Yeah, it's about what we bought it at, because the other day it was 99.47. So we're not even at a loss on that. But if you go back on a chart here, Disney was $203 back on March 8th, 2021, and it was down to $80 when everything shut down in the prior year. But you basically are going back again. Go back $104, and let's go on a weekly chart here. I mean, you have a lot. I mean, here we are, 2015. Look how far we're going back, guys. Look at this craziness. we're basically going back into the 2000. We're going back like 5 years, and but there's people that remember it was at $80. So that you get someone who has 100, they say, yeah, I don't want it to go. I've had enough. Or sometimes if they're on margin, they're forced to kind of sell good stocks because their bad stocks have done bad. I know I personally have had that happen already, and now basically I am very nibble and just little chunks of stocks, and still putting in. My family is still putting in, my kids, my wife, and they're still dollar cost averaging in IRAs and 401ks. You know, for the long term, we'll be fine. And these are the times actually that you know if this stays like this for a while. If you bought a little bit high here, that will you know, lower the average for that. So, but we are down now approximately 30% on the Nasdaq, and the Dow. Let me double check here. The Dow has to be down. Let me see. DIA, which is the ETF for the Dow. The Dow 37, 31, 350. 10%. I mean, we definitely are down, but there's so much more it could fall. Really, I mean, we really could see, and this is what I said. And a 30% drop on that would put this down in the 2900 range. So there's a lot of big stocks that have been propping up the market, and just be careful. I know if you know not many people are maybe watching this and they get discouraged and hearing the bad news all the time, but if you stick to a plan and don't be on margin, do your IRA, do your 401k over the next 5 or 10 years, you'll be fine. We have a lot going on. That disposable income has been wiped out. Food is high. I know personally myself. Two people pretty much driving normal, well, not including my son because he takes care of himself, but just me and my wife alone, our gas bill is costing us approximately $400 more a month. Our food bill is probably costing about another $200 a month, and just to heat the house is costing another $100 a month with the oil that we use. And we just got notice that our electric, the rate is going up 47%. So you got the average family easily spending $500 or $6,000 more a year. You know, you do the math sometimes. If you're getting, you know, $2 more an hour and you're making $4,000 more a year after taxes, you're down to $3,000. But your bills are now $6,000 more a year. You're actually $3,000 behind, and with no way to kind of make extra money to make up for that. And it also, you know, you say to yourself, and people, that's what happens too, I think. People stop, you know, if your bills are more, people say, well, now I can't afford to put my IRA. I can't afford to put my 401k. So we got a real mess here. And I think we really need to go back to, there's a lot to do. And I just don't see that. It seems like our government doesn't care of destroying wealth and hurting really middle class families and stuff. And I don't say that lightly or say that to take sides. It's just I see it now even with Elon Musk talking about it. You know that you got a lot of people just not, you know, on both sides that are not happy with what's going on in this country. So. All right, hey, I appreciate the support. You guys give me thumbs up and talk about all things money here. And these are days it's difficult to make videos like this because I don't want to sound negative or depressed or sad for people. I just want you to know what I'm thinking and what you should be thinking as far as don't let it get. Sometimes take a break. You know, if you're dollar cost averaging in your IRA 401k, it don't even matter. Days like today, you don't even watch. It doesn't even bother you. So have a good day and come around and see me again. I'm posting more videos. Bye.